how much will you see increases in premiums? If you put everything in place to help lower your possibility of having a severe claim, at best case scenario, you're going to see at minimum, I believe a 20% increase over the next 12 to 36 months guaranteed. And
hell, that is holistic. All right, everybody, I got a good one for you today. This is a super hot topic, insurance, especially if you're in the Southeast or Florida. We've got Brian Miller with USI Insurance Services. Brian and I have known each other for probably 20-something years, back when I actually used to work for someone else. And Brian's always been a go-to guy in his industry. He insures for some of the biggest big dogs on the planet, from both smaller assets up to large institutional assets up to portfolios. And I always lean on him for insurance guidance. And so I wanted to bring him on and just kind of dive into this thing, especially now that we've had a hurricane in Florida, and just kind of get the scoop on what the hell is going on in insurance. So Brian, thanks so much for being on here. Real quick, just tell us about yourself, about USI, what you guys cover geographically, your type of products and all that stuff.
yeah, hi, Beau. How are you? It's nice to see you again. It's been a while.
Yeah, man.
So I'm now with USI Insurance. We are one of the largest brokerage insurance companies in the entire country. We are a $2.5 billion revenue insurance brokerage. So
with a B.
Definitely we're able to write everything from the smaller, mom and pops, even personal lines, all the way up to the stuff that I focus on, which is going to be the $1 million accounts and above. And we even have separate divisions for employee benefits, retirement accounts, things like that. So we do it all. So we've had a lot of changes over the last few years, as you kind of specified earlier. It's a scary comment because I've been in the business for a while, and maybe even prior to the insurance world, I was in the commercial banking industry, and just the changes have been catastrophic.
So tell us, that's what I want to start with, man, is just whether it's in your opinion or USI's opinion, why has insurance gone so nuts in the last, call it 3-4 years?
Really, everything has started, if you have noticed, we had a big issue with COVID, and COVID had brought a lot of changes to everything, which in return has given us such a drastic supply chain, employee losses. Clearly, everything started to now generate to inflation, and inflation has increased so fast that a lot of the things that have changed in costs are not even being reflected in our inflation rates today. For example, when you have a shortage of employees, you're not getting the supplies you need in time, which is now going to cause more issues with getting those supplies put up in place, whether it's the construction industry or if you're going out to Lowe's or to the grocery store. And now you buy a piece of plywood that one day a week ago was $45 a sheet, and now it's $150 a sheet. The increase in the inflation won't even catch up to what's really happening because it's happening so fast. In return, the insurance rates can't keep up with the changes either. And this is just in the insurance economy. You can look at any field of industry right now, you just can't keep up. Things are changing so fast. But on top of that, when you see these types of increases and you don't see people's income changing as fast, that is where the issue becomes.
Perfect storm. Brian, thanks. That's awesome input. So tell us, what does, in particular, when it goes across 2 or 3 states, what does a hurricane do in these scenarios, and what can we expect as a result of the recent hurricane?
This particular situation, Ian, as we already know, has been one of the top catastrophic issues going on. And we've had plenty more before that. Now, remember, going back a few years ago, too, we've had one just as big, and it wasn't even related to hurricane. Let's say, hypothetically, the deep freeze in Texas. That was another $30 or $40 billion catastrophic event that happened that hit the insurance world. It has nothing to do with the hurricane. Florida is being number 1 in the country for these types of issues when it comes to natural disasters. Number 2, California, and then number 3, I believe, is Texas. Now, this is property claims. So when you have one hurricane that comes through, remember, we're on a peninsula surrounded by 3 sides of water. It's going to destroy or create major damages throughout majority of our state. So when this combined with multiple states, even after it passed through the Atlantic and then went up through the South Carolina, up into North Carolina, a lot of these construction areas that lead into inland, even though, let's say Charlotte, North Carolina, for example, has had millions of dollars of catastrophic claims from Ian because majority of their buildings up in those areas were all frame. So this is becoming a big issue. A lot of the old school buildings here back in the day were cement block in Florida. Builders over the years changed to frame to save money. And now they're realizing that this is causing more and more issues.
So, Brian, let me ask you, what needs to change in the industry, if anything? Do you see any changes or any changes that are possible to bring things back to normal? Like, what would have to happen?
Well, I hate to be Mr. Doom and Gloom on this, but realistically, there is going to be changes that are coming that are going to be completely out of our control. And, building owners, mainly in the state of Florida, but honestly, it's going to be nationwide. You're going to see a lot of big changes, such as code changes. You're going to see construction changes, improving construction codes and quality, things like that. There's going to be certain requirements now that a lot of these contractors, especially, like I said, in the state of Florida and other major states throughout the country, that are going to see drastic increases in costs because of these changes that are needed to come for construction. The only way we're going to see any type of positive changes is hopefully not having some type of a catastrophic event, at least a minimum of a 3-year term. They're going to start increasing. I mean, I'm just telling you right now, frame is going to eventually go away. And the biggest thing that's going to happen, which is probably not
even in the state of Florida, like even center of state, you think eventually that's going to go away and everyone's
I do, because especially in Florida, because technically, in fact, most insurance carriers now are starting to consider Gainesville as a coastal city just because it's on a peninsula. So the ratings are completely different when you consider it being a coastal area. That's unfortunate for people in Florida. There's not one area in the state of Florida that is not considered a coastal area. In fact, there's areas now such as Charlotte, North Carolina. They're now putting wind hail deductibles in these areas that have never had them before. It's now becoming a typical requirement for a lot of these carriers. So improved building construction is definitely going to be a big drastic issue. It's going to cost a lot more to construct properties, especially on coastal states throughout the entire country. Until we start seeing lower catastrophic events, which is out of our control, or lower claims, which once again is out of our control.
It's only been increasing. I don't see that slowing down.
Well, even with inflation increasing, which is crazy. I mean, that's a big issue and another topic I'm sure we'll talk about here shortly. But when you start seeing a cost to reconstruct the building is going to say hypothetically $3 million, but meanwhile the insurance agent has it listed at $2 million, that's a pretty big gap. And that's just because of inflation, and they can't keep up with that. So now the next requirement is these carriers are going to put this cost on the buyers, or the owners of the property, should I say, of now doing an annual appraised value on properties. Now, remember, appraised value is not going to be today's market value. It's going to be today's cost to construct, which is what a lot of people get confused on. So today's cost to construct a normal area, a masonry non-combustible property might be $180 a square foot, whereas 5 years ago, at the high end was $115 a square foot. That's where it's going for sure.
Leading into that, what are the components that go into the pricing?
So one issue is on the multifamily side, as you already know, majority of these buildings are frame, a lot of the apartment complexes. And if you're lucky, you might find one that have cement block on the first floor and then the rest is flame. That is becoming a big issue because, as you already know, if you look at, let's say, cat modeling and stuff like that for hurricanes or major storms, the winds significantly increase every, say, 20 feet in elevation. So when you have a 5 or 6 story apartment complex and it's all frame, you're talking drastic catastrophic flame events happening where you see the roofs flying off these things like that. So you're going to see a lot of your pricing is definitely, majority of it is coming from property in today's market. General liability, believe it or not, is much more affordable. But once again, when we break out states, Florida is one of the highest. It's actually, I believe, the 3rd highest in general liability claims. And that is because they consider that a legal friendly state. And, California is very similar. Florida is one of the tops. And so what they do is they basically favor the claimant. Clear example, a recent issue in one of the apartment complexes that our company rights. And there's 2 gentlemen that got into an argument at a party. They did not live on the premises of the apartment complex. They both pulled out their guns and started shooting at each other. One of the guys ended up getting killed. The parents of the person who got killed sued the apartment complex for $10 million because they did not have enough security on site to prevent this from happening. And they won. So there's a general liability claim for $10 million against the apartment complex that had nothing to do with the incident. And that's what's happening. And this was in the state of Florida, by the way.
That is absolutely absurd.
And that's unfortunate. So you're seeing rates in the liability side that are going to drastically be increasing as well. Right now, property clearly is number 1 because of Mother Nature, unfortunately. But number 2, general liability is getting pretty ugly as well. Top of that, you'll see fraud. Auto rates, as you already know, are one of the highest in the country. Homeowners insurance, good luck, which might lead up to your next question. Good luck trying to find a carrier to even insure someone like that.
Tell me about, I've heard, at least on the single family side, there's a lot of stuff going on with roofing. Like the roof couldn't couldn't be any certain age or it had to be replaced on your renewal. Is that happening in multifamily as well?
Believe it or not, multifamily is getting hit probably one of the top out of all, and that's unfortunate. But the commercial industry in general, this is becoming now a new norm, and this is pretty recent over the last 6 to 12 months that I've seen. If you have a commercial property, which would include multifamily, if you have a roof that's over 10 years old, they're more than likely the insurance carrier is going to now rate that as an actual cost value for replacing the roof, no more replacement costs if it's over 10 years old. Now, mind you, most of these roofs are considered 30-year shingles. Anything over 10 years, they're not going to consider that. Residential, it's even going to be worse. They're talking less than 10 years old. So getting that or understanding actual cost value is a drastic difference between replacement cost value, because you're getting half your money if something drastically happens. It's going to be based off of a depreciated value on your replacement.
Okay, so if I understand this, if someone has a, call it 20-year-old roof, then the insured amounts or whatever will only be based on, since they want it to be 10 years or less, they're going to place a value on that roof and only cover half of that specific example. Like if there's a 20-year-old roof and it's 10 years beyond their 10-year limit, then in the event of a hurricane, they're only going to give credit in the event of a full loss for half of that value.
That's pretty much right on.
Wow.
Yes. Like I said before, it being 10 years old is, I don't know anybody who replaces a roof every 10 years. I mean, that's
yeah, it's nuts.
It's not even in the budget.
And there's no workaround like for the type of fastening that it's being used, the type of roof.
No, because you're dealing with the shingles. Metal roof, it does help. It gives a little bit more longevity, of course. And but the problem is when you deal with shingles, which is majority of the properties out there, the cost difference between putting shingles on a property and cost difference between putting metal roofs on a property is going to be a huge difference. Not only that, of course, yes, you're going to have a little bit different ratings, but that's where it gets to the next category is how much will you see increases in premiums? If you put everything in place to help lower your possibility of having a severe claim, at best case scenario, you're going to see at minimum, I believe a 20% increase over the next 12 to 36 months guaranteed. And
hell, that is holistic.
And that's
if you have everything in place.
Yeah. And that's if you have everything in place. And the other thing is, remember, most carriers are pulling out of Florida, if we're talking about Florida right now. And we've had this before in the past. They're definitely going to go through a lot of changes, but they may come back in 10 plus years. Who knows? But right now, most carriers are pulling out, and ones that are staying are going to be the high risk, non-admitted carriers.
That's unbelievable. Last question. I know that you've done some portfolio type policies. For instance, I had something that you just quoted for me recently where a gentleman had 15, 20 apartment complexes all in one market. So he had what would be like a portfolio policy, right? So his insurance rates per property were much less. In fact, it was about half of what a new buyer would be paying if they came in and just insured that one asset. So how does that work? Who's best customer for that? How do you write those? What's the benefits, if any?
Sure.
Tell me about that.
First of all, it's getting harder and harder to find a carrier who wants to portfolio multiple properties. And usually if they do, of course, they have to be like type properties. So it could be 7 apartment complexes. But now if you have one that was built in 1970, even though it's been updated, basically, they're more than likely not going to put that on the same policy of other buildings that were built in 2010. So usually they're going to be separated. But when you combine these types of properties together, there's pros and cons. Pros are cost efficiency. The cons are, of course, because you're sharing a lot of stuff. Now, property limits will be the same. Deductibles will be the same because it's per incident, not per property. The negative is going to be that you're sharing liability limits in most cases. So people tend to, increase or add umbrellas, things like that to increase those liability limits. But the problem, once again, is when you have a major or catastrophic claim on one, it could affect the entire policy as well. So if you see a 10% increase, if you had it on a separate individual policy, that's a small increase on a $20,000 premium, hypothetically. Now, if you have a $150,000 premium, you see a 10% increase, that can be a big difference. So
they can be advantageous in geographic locations in which it doesn't have hurricanes, earthquakes, whatever. That's the better place to have it.
Right. And like I said, majority of the carriers are going away with that anyway. On the positive side, you're going to have better limits if you have an individual policy on each one, but most carriers don't want to deal with sharing policies as much anymore.
Ryan, one more question. Do you have any freaking good news at all that you can give?
Hurricane season's almost over.
Well, that's
this year.
And we'll end on that. Hey, man, thanks so much for being on. Tell us how people can get a hold of you, and then we'll also put that information down in the description of the video.
Yep, sure. They can email me at brian.miller@usi.com at any time, or of course, cell phone 352-672-1395.
Awesome, brother, man. Appreciate you giving us the time.
Thanks, Beau. Appreciate it.